Today is Thursday, July 4th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and Kevin Mirko are joining us on the show today. But first, we will take a look at some of the market indicators. The cryptocurrency index CCI 30 has been edging up towards the 4,900 point mark. The index is up by 3% so far in July. Its gain measures at more than 120% to date. The 30-day Bitcoin volatility index slipped slightly yesterday, but it remains above the 5% mark as the crypto markets are going through some turbulence. The CoinMarketCap website's 24-hour traded volume indicator has declined towards the $80 billion zone. The Messari website's real-time volume has slipped south of the $4 billion mark. The Bitcoin dominance indicator is on the rise as the king of crypto heads higher. It has now once again approached the 63% territory. The top 5 digital assets are mostly trading in the green. Bitcoin has retreated slightly after approaching the 12K level. Ether is virtually unchanged over the past 24 hours as it faces resistance around the $300 mark. The 40-cent psychological level continues to work like a magnet for the price of XRP. Litecoin is up by close to 3% to trade above the $120 level. And finally, Bitcoin Cash has made some gains above the $400 mark. The Coin 360 heat map shows a bullish picture as assets are trading in the green across the board. According to the Token Spread website, the XMO and BitMEX exchange have the biggest price difference for the Bitcoin dollar pair, and it is less than 0.5%. The XMO platform has the biggest spread, and it is 0.32%. We will now take a look at some of the characteristics of the Eco Real Estate token. This project was launched to attract investors who are interested in financing sustainable development and land rehabilitation. This is done by an Ethereum-based token, EcoReal, which represents a fractional ownership in all assets that the project invests in. The digital asset was sold for 6 cents during its initial coin offering, and as of today, it trades at nearly 21 cents. We will now review the performance of various cryptocurrency asset classes as grouped by the Messari website. The infrastructure group is mostly driven by bullish sentiments, and it posts an increase of just under 1.3%. The volatile media and entertainment category is the most bullish asset class with a surge of 5%. The Decentraland's Mana token is one of the top bullish drivers. The financial sector is up by 0.5% as there are both increases and declines. The currency category has gained 2.3%. Bitcoin is one of the top bullish drivers today. And lastly, the services section is virtually unchanged. The Huobi token is down by 2%, while the SIA posts an increase of 4%. This is where the 5 major cryptocurrency categories stand so far this Thursday. We will now provide you with an overview of the most significant moves among the top 100 digital assets. We will then be back with our crypto experts after this short break, so do not go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risk, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
CEO of the Coin Metro Exchange, and Jason Fernandez, COO and co-founder of the AE token. Guys, great to have you. How are you doing today?
Great. Good, thank you, Leah.
Good, absolutely brilliant to hear. Now, Jason, will come to you first. The price of Bitcoin returned to the $12,000 mark as it recovered the losses that were posted earlier in the week. This pushed the Bitcoin dominance indicator back towards the 63% territory. So, Jason, what are your thoughts on these most recent market moves?
So I did expect it to cross 12K. I think I said that yesterday. I actually think it will go to 14K soon. In fact, it's interesting that you mentioned Bitcoin dominance, because I was just looking at that yesterday, in fact. Generally, Bitcoin dominance has usually hovered around like 51, 52%. And right now it's at 62%, which is, a good 10% more than what we're used to seeing. And that indicates to me that a lot of new money is going in, and a lot of that new money is going to Bitcoin. It also says to me that there's possibly going to be that altcoins are possibly due for upward correction. And I think a lot of money is now going to Bitcoin because people think that will go up, and thus far there's been so much interest in it. But when Bitcoin slows down, a lot of that money will be looking to get into some altcoins, and I think the key gainers then will be coins like Dash and Litecoin.
And actually, I think that's really interesting that you mentioned altcoins, because that's not the first time I've heard that on the program today. People think that actually altcoins times are coming soon, but you expect it to go to 14K very soon. So, Kevin, what are your thoughts on the most recent market moves? Can we expect 14K relatively soon?
Well, I think that we're definitely in the range. I think Jason's probably correct on that assumption. We've been in a range. I think I mentioned last week when I was here, 92 to 9,800 as a bottom, at least in the short term. Just quickly looking at a chart before popping on the air, and I think we made it close into that range. We got down below the 10K level, which obviously there was a lot of buyers sitting down there. There's always when you reach resistance. So let's say 10K as a resistance, you're always going to find people selling around that level. However, as soon as you pass through a major key resistance, that becomes a support, then you have a lot of buyers that sit below those levels. So it was no surprise that once we broke through 10,000, we saw a lot of accumulation and then a quick reversal back above 10,000. I think with what we sit now, the way we've seen kind of a knife through butter through 11,000 and upwards into 12,000, 14,000 isn't that far of a way off, and it still puts us roughly 30% below all-time highs. So it still keeps us within, let's say, a key retracement area. So yeah, I think that's probably a decent prediction. And I do agree with 100% the ebb and flow. We've been talking about the ebb and flow between altcoins, or micro caps and macro caps in crypto for the last 2.5 months, I think, 3 months. And that's definitely going to continue. And yes, seeing 63% tells me there's definitely new money coming in, but there's a lot of money that was also flowing out of altcoins. We saw this across the board at our exchange and many other exchanges, where volumes in altcoins started to diminish and price points started to either become stagnant or started to roll back a bit as money flowed back up into Bitcoin. And I think once we see a little stagnation on Bitcoin side, like Jason just mentioned, we will see the absolute opposite, which means that we probably will see a spike in altcoins as Bitcoin price starts to find, let's say, the next accumulation spot, which probably will be somewhere around 14,000.
Okay, so definitely a very similar perspective there. 14K we can expect to see, and actually interesting. So new money coming in, but also money from the altcoins coming into Bitcoin. Now, just moving on, Jason, we're going to come back to you. The Cambridge Centre for Alternative Finance launched a new real-time index tracking the total electricity consumption of the Bitcoin network. So does this data bring some clarity as to what the electricity consumption of the network actually is?
So the first thing to mention is that this is still an estimate, and there is still quite a bit of error margin here and there. But I think what's sort of more important than the total electric consumption is where is that power coming from. So we've heard from CoinShares recently that clean energy sources powered more than 74% of the Bitcoin network, mining network, and that's pretty significant. Also keep in mind that the amount of electricity consumed every year by sort of always-on devices and that are inactive at basically in homes across the USA alone could basically power the Bitcoin network for 4 years. So it's far from the massive ecological disaster that people make it out to be. And sort of the final most persuasive point I'd like to make is that nobody ever really calculates the enormous environmental impact that having buildings, building new banks, having huge giant glass structures littered across the landscape, how much that costs both in actual money and also in terms of the ecological cost, water, all sorts of other associated costs that we don't really think about. ATMs, all over the world, they have a significant ecological impact. So a lot of this is just replaced by Bitcoin. So you have to actually consider that in terms of offsetting, whatever cost it is to mine Bitcoin and whatever electricity consumption sort of it comes out of that.
I guess in some ways the expression I would use there is it swings and roundabouts, isn't it? You gain some, you lose some. So, Kevin, let's hear your thoughts on this.
Sure, just continuing on what Jason said, the cost just to print, produce, and then transport US dollars or euros around to central banks and then distribute them, and the logistic cost to distribute them into banks, into people's pockets, is immense. I think that when you any statistic, each side of an argument can use the same statistic to their advantage, right? What I would say though is that because Bitcoin or mining is so intensive, power intensive, people will instinctively look to where they can save money when they're mining, which is going to lead them to alternative sources of energy because usually they're cheaper. So yes, it does. There is a massive amount of energy that is consumed. Keep in mind, though, that as we start to kind of create new technology and as the technology expands, we're moving away from these energy-intensive models, right? So proof of work is giving lead to proof of stake and other type of models that definitely don't use as much, aren't as energy, don't consume the same amount of energy that proof of work does. But again, statistics can be made to look bad or good depending on how you want them to look. So yes, there's a lot of consumption, but as Jason said, and I just mentioned, the banks, the buildings, the people, all the infrastructure in traditional finance, you can't just look at the SWIFT network and say, well, the SWIFT network costs less than the Bitcoin network. Well, that's a little bit ridiculous because for the SWIFT network to work, obviously you need lots of people, lots of buildings, lots of other infrastructure, lots of logistic costs, lots of people traveling on highways to get to work, to go to the banks, to actually run the systems that are antiquated. And so yeah, I think when you really compare, if you wanted just to take an apples to apples comparison of actual cost to run a network, there wouldn't be much difference right now between the cost to run, let's say, a parallel Bitcoin network for, let's say, an X amount of payments to be run on that network versus X amount of payments to run on SWIFT, considering all the infrastructure that's required for SWIFT to function and all those indirect costs that no one really wants to analyze.
Okay, I think that's absolutely fascinating because I don't think that's actually something which people know of. That's not, I don't think, general knowledge there. So very interesting to hear. Well, actually, running that Bitcoin network is just as expensive as running the traditional finance infrastructure there. Now, Jason, we'll come back to you. The South American bank BTG Pactual and Dubai-based asset management company Dalma Capital announced their plans to utilize Tezos blockchain for security token offerings. So why do you think that this particular platform was chosen for this purpose?
So one of the things that BTG and Dalma have announced is that they plan to tokenize a range of traditional and essentially alternative investments on the Tezos blockchain, and that includes projects with global sports clubs, equity, and debt interests. And one of the reasons they highlight as to why they chose Tezos specifically is because Tezos is a self-amending blockchain, at least that's what they call it, and a smart contracts platform. So while both Ethereum and Tezos feature smart contracts, Tezos is validated by proof of stake and has on-chain governance as opposed to off-chain proof of work model followed by Ethereum. And essentially, the sort of opposing methods have caused quite a bit of debate as to which one is better, which one is worse. People have suggested that Tezos is an Ethereum killer. And it's also important to note that this is supported by Tim Draper and Draper Associates, and they're one of the stakeholders in Tezos. So it's something that they're working on. That they say it's specifically that they've used this token specifically because it sort of helps achieve their goals in terms of their particular use case.
Okay, so you've referred to on-chain governance, and you've said that Tezos is a self-amending blockchain. But Kevin, what else would you like to add? Why else do you think that this platform was chosen?
Number one, Tim Draper is a good salesman. Outside it, look, if you look at ERC has a security token protocol. It's ERC 1400. I think there's also 1410 and 1420. They're slightly different on how the protocol actually functions, but they're relatively the same. And there's a lot of blockchains, and there's a lot of companies looking to utilize different blockchains to create a tokenized security protocol. I can tell you that it's something we're looking into as well, more on the institutional side, meaning more on the actual back-end side. I'm not going to talk about what that is right now because it wasn't part of the question. But let's just say that every one of these has major holes, major holes on how they plan to actually operate a tokenized security, let's say, infrastructure. Mainly because let's say for Europe, for example, you need to cooperate with what would be called a CSD, a Central Securities Depository. Now, you can create most of the things that a CSD can do, like settlement and other things, just based on a protocol. You can create that, but unfortunately, you're not going to be able to pass that under regulation. So I think aside from the no fork, so no forking around on EOS, right? It's a self-amending blockchain, so it doesn't require forks. And aside from the fact that it's proof of stake, so it may be more let's say, easier for it to scale, at least in their minds. I still think there's major holes. I think that they're going to try to amend those holes, but those probably are the two major reasons why they picked it. And to be honest, Tim Draper being a part of that foundation is probably one of the major reasons. One, it gets them into some of his other investment vehicles, it gets them into his network, and it's probably going to help them amend some of the problems that they currently face in order to actually make a global compliant protocol, which they do not have yet.
And I just want to continue on this topic. So Kevin, we'll stick with you for the minute because the price of the Tezos coin jumped by double digits to trade at more than $1.20. So do you think, is it still down significantly from its all-time high of $12? And is this asset something that traders and investors should therefore actually keep their eye on?
Well, I can't really give my personal opinion here, but what I would say is that there's a lot of players looking to create this underlying protocol. The problem is no one is looking to actually focus on the pain points that exist in the traditional secondary market, right? So traditional secondary market is segmented. Everybody who's working on this problem is segmenting it once again, meaning the London Stock Exchange, Deutsche Börse in Germany, SIX in Switzerland. They all have plans to create a tokenized security model, mainly based on the securities that already exist in the world today. They're not really talking about STOs and things like that. Some of the smaller players are talking about STOs. Most of the bigger players just want to tokenize the existing infrastructure, but they're keeping it segmented. They're not looking at cross-border. They're not looking at instantaneous transfer of ownership. That's the only reason really to do tokenized securities. There isn't many other reasons other than just saying that you're doing something on the blockchain, which, to be honest, still works. You walk into a boardroom and have an idea, and they go, and you go, oh, by the way, we're going to put it on blockchain. And then everybody starts, popping champagne bottles and running around like a nut, because they think that somehow that's just going to make the idea so much better. But it doesn't, though, in reality. So I think that, to be honest, it's a hype-driven market. We talk about this all the time. This is a good piece of hype for Tezos right now. I think long-term, it's not going to make too much of a difference, because I think that unless they focus on actually addressing pain points that exist in current markets, which as far as I can see, they are not, long-term perspective for this is not all that great. Short-term, however, it probably will see some additional upside as they release a little more PR over the coming weeks on what they're doing. But that's just because we're in a hype-driven market, not really because of any substance.
So there is some potential to be done there, but you don't think they're actually going to achieve it, so probably not really worth keeping your eyes on. Well, Jason, what do you think? Do you equally think, well, this isn't going to really play out as well as it could?
Yeah, I agree with Kevin. I was going to say that, yes, I think it's an asset that traders and investors should keep an eye on, but only because I think it's due for a correction soon. So, I mean, it popped up pretty significantly. It's still only worth a tenth of what its all-time high was, but it pumped up pretty significantly on the backs of this news. And ultimately, this is just like two very large companies that are deciding to securitize, various different assets. Now, true, they do have some some ideas just sort of waiting in the wings, some business plans that are going to sort of materialize as soon as they launch this. However, and that's probably the reason that they're going to sort of, as Kevin said, might sort of see some more gains over the next few months as sort of this news starts trickling out. But over the long term, we really haven't heard very much about Tezos for a really long time. And as a hyper-driven market, if they don't have something significant to sustain this, a month or 2 months out, is going to drop pretty precipitously. And I think right now what they're probably going to end up doing is releasing small amounts of information every week to sort of just keep the price high, at least for a little while. And then after that, I think once they run out of the news, it's going to drop.
Okay, so very, very similar there, and I guess you think, the only reason really to keep your eyes on it is because it's due for a correction, so quite similar ideas there. Now, just moving on to focus back on Facebook, because it's always in the headlines. Every day there is something new, and the US lawmakers have requested Facebook and its partners to actually stop the developments of the Libra stablecoin. The Geneva-based Libra Association has a lot of big names among the founding members. So, Kevin, we'll come back to you. Will this increased attention drive some of these members to withdraw from this association and therefore jeopardize the project from within?
I don't think so. I think you may see maybe some smaller entities that may I don't know, dwindle under the pressure, so to speak. But I think most of these entities, MasterCard, for example, and some of these bigger payment gateways, knew this would happen. I think anybody that looks at the way they announced it, it's a very odd story, because the way they announced it, the PR they put behind it, is much more dangerous than the actual plan that's written in that white paper. The actual plan that's written in that white paper is basically a tokenized hedge fund that sits on a bunch of assets and creates a payment gateway to monetize different pieces of infrastructure that Facebook and their partners have never been able to monetize. That's pretty much it. But the way they advertise it, blockchain, stablecoin, etc., definitely rings bells with regulators. You're talking about what would be one of the biggest countries in the world if you're talking about a populace. They say 2 billion users. I've said this famously a million times now. My ex-wife has 77 Facebook accounts. So obviously there's not 2 billion users, but they have 2 billion accounts. They still have a lot of users, though. It's a huge populace. So, but the U.S. thinking that they're going to that it's a security issue because they're pulling away trust from the U.S. dollar is ridiculous, because all transactions that would happen with Libra in the U.S. would be underpinned and pegged directly to the U.S. dollar. So it doesn't really make any sense, to be honest. But again, I think it derives most from, like everybody in this industry, unfortunately, there's a big difference sometimes between what's advertised and what's real, and there's also a huge difference between perception. And I think you look at Twitter and everything else, except especially crypto Twitter, and Facebook Libra was automatically either the best thing that ever happened to crypto or the worst thing that ever happened to crypto, when in reality it's not even a crypto product. It is something completely different. But again, so I think relatively speaking, it will move on. I don't think this is going to have too much, at least this initial little letter they've gotten won't have too much of a stoppage, let's say. They have a lot of lawyers. They will go in, they will sit down. Eventually, they will bide their time. It will take a long time before they actually sit down, but they will eventually. And eventually, we'll see more of exactly what their plan is. Because to be honest, we still don't know 100% on exactly what their plan for world domination here is with the Libra. We know bits and pieces, but the bits and pieces we know are quite benign, to be quite honest, compared to how they were initially advertised.
Kevin, it's always brilliant speaking with you. I have to ask you, not today, but I will ask you why your ex-wife has 77 Facebook accounts, but that's for another show. I guess in this, that's another show. But I guess in this situation, really, perception isn't quite reality. So you're saying, well, actually, you know, it was more the buzzwords which really caused those issues. The white paper actually doesn't have as many issues as the regulators may assume it might have. So, Jason, we'll come back to you. What are your thoughts with regards to, as Kevin put it, world domination, Facebook, LibraCoin?
So I think actually Facebook's, in as much as Facebook is relying on their partners, I'm really not as confident that their partners are going to stand strong as Kevin is. So they have something like 27 partners, and that includes Visa, MasterCard, Uber. But a lot of them are approaching, Libra really rarely. I mean, they've signed non-binding agreements, so there's non-binding, remember? And they've only signed these agreements to join this effort after knowing full well that they weren't obliged to promote or use a digital token and could basically easily back out if they didn't like where it was going. So 7 executives from these companies have actually spoken on the condition of anonymity and essentially all but come out and said this. And a lot of the companies are hesitant to associate themselves so closely with Facebook and Libra, particularly because Facebook has so many issues with regulators around the world. So they've got a shaky track record on privacy, how they treat their corporate partners. There's also an uncertain legality around cryptocurrencies. It's sort of frowned upon in a lot of countries. Keep in mind that they did announce that out of the 27 partners, that each would be giving at least $10 million to join the association, which would then vote on various different things. But no money has actually changed hands. So no money has actually gone out from these 27 companies to actually fund Facebook. So it's still up in the air, and the agreements are non-binding. So they're not standing on pretty shaky ground in as much as their partners are concerned. And a lot of the partners have said that they would decide whether they would join the association or not, based off of public perception and how things actually play out, and as more information comes out about it. I know that they approached some massive companies like Goldman Sachs, J.P. Morgan Chase, and Fidelity, and most of them declined to join because of again the regulatory problems around cryptocurrencies and the general perception.
And conflicts of interest, for sure.
Sure, conflicts of interest. Another thing is that they did sign up 2 big credit card companies, like Kevin pointed out, Visa and MasterCard. But MasterCard was actually one of the last companies to commit. And they actually released a statement saying, while they released a statement sort of supporting Libra, they were really careful to sort of downplay the whole thing by sort of not mentioning Libra by name, and also by saying sort of like this was just one of multiple partners that they've signed up. So they were really careful to sort of downplay it. And I think a lot of other partners declined Facebook's request to put out news releases and speak with media outlets to sort of back up Libra. So a lot of people, a lot of their partners are not as firm as probably Facebook would like, especially in the face of the massive regulatory burden that they're going to face going forward.
Okay, well, very interesting. It's always a pleasure hearing 2 different arguments there. And I guess, like you said, no money has changed hands yet, so the future is yet to be seen. Now, just finally, we recently spoke on our show about the number of Bitcoin ATMs crossing the 5,000 milestone. The CoinSquare Exchange has announced that it has taken a controlling investment a controlling investment position in Just Cash. This company has developed a software that enables any ATM to sell cryptocurrency to customers. So, Kevin, we'll come back to you. Is this something that should give a major boost for the crypto adoption?
If it was actually adopted, then yes, it could probably at least get more eyes into crypto because people would see it almost every day. The question is if it's adopted, because most banks that run machines, or even most non-banks that offer machines to banks, probably would be reluctant to put this software on their machines for any variety of reasons, not to mention regulatory scrutiny. And the fact that in order to do this, at least in the U.S., for example, you need MSB licensing in every single state. Being a bank in some states isn't even enough because there's specific regulation that tailors to non-bank movement of funds. So I think that while the plugin sounds nice, I don't think it's going to see that much wide usage unless it's non-bank-owned ATMs, which is a relatively small amount. 20 years ago, that was a huge amount of ATMs around the world. Nowadays, non-bank-owned ATMs, is a very small fraction of what's out there. Most machines are branded by a specific bank. So I don't think most banks are going to be ready to pull on to take this burden on for relatively probably no upside for them.
Kevin, thank you very much. And Jason, just finally, your final thoughts for us, please.
So I think it'll depend on how it's actually implemented. So I know in some countries, so for example, India, when the India came out with its Bitcoin ATM, the legal framework that they used in order to launch it was essentially as a kiosk. So because cryptocurrencies aren't money, it would be the same as sort of buying a Coke out of a vending machine, essentially. Like that's kind of
airtime for your cell phone, basically. Yeah.
Exactly. So that's kind of the way the law that they went under, and if that is implemented in the same way, then you could see this move the needle, particularly if it was adopted by more networks, by more ATM networks. So apparently the idea is this allows Just Cash to retrofit the existing ATMs with essentially an ability to sort of sell cryptocurrencies via the customer's debit card, and it's sort of like the first thing of its class, really. And apparently there's some 250,000 ATMs, non-bank ATMs, that this would probably work with. But the organizers of CoinSquare essentially has said that they expect to integrate with something like 170,000 ATM machines across nearly all 50 states within the year. So presumably they've done some homework on what would be required in order to actually make that possible, because they said 170,000, not 250,000. So maybe they haven't gotten the last 80,000 ATM for whatever reason. So yeah, so it seems like they've actually looked into this a little bit, and it might actually move the needle, particularly if they're able to get more ATM machines on board.
Kevin, Jason, as always, thank you so much. It's been an absolute pleasure having both of you on the line with us today. Thank you.
Thanks, Leah.
Thank you, Leah.
Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has remained above the $330 billion level. There are no significant changes to trading activity as the CoinMarketCap website's daily traded volume hovers over the $80 billion mark. Bitcoin remains trading at just slightly less than $12,000. Well, that is all for this Thursday's Crypto Now live show. We thank Kevin and Jason for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.